and a very warm welcome. I am Ruchi Sharma. Year 2022 has been a very eventful year. There's a lot that happened this year that deeply impacted not only the crypto industry but the NFT sector as well. These events have raised a lot of questions regarding the rules and regulations, taxes and future of this industry. To answer these questions and many more, we have a special guest with us, Mr. Ravi Chamria, co-founder and CEO of Zeeve. Welcome to 3.0 TV, sir.
Yeah, hi, Ruchi. Thanks for bringing me here.
Thank you, sir. So the so-called crypto winter started in March, and since then we have seen decline in the crypto market. From the Russia-Ukraine war to the Terra Luna crash and now FTX collapse, these have been many blows to the crypto market. What is your overall view of the current crypto market?
Yes, I would say that, these incidents have been happening. It's not just the Ukraine war, but we had, failure of Terra Luna as an algorithmic stable coin. And then post that, we have seen FTX and BlockFi and few other centralized institutions that have failed due to lack of regulations or lack of governance.
Right.
So, but overall, if you see from a crypto price perspective, yes, the market has gone down quite a bit. But if you see from an overall Web3 space, it has not made a major dent. We are seeing that, the Web3 ecosystem is growing very fast in last 1 year. The number of developers who are coming to this ecosystem is growing. We are seeing more and more dApps and smart contracts being built and deployed. And in last few months, we are also seeing a trend where more and more enterprises are getting into blockchain.
Right.
So blockchain is the technology, Web3 as a space, still growing. Yeah, from a crypto price perspective, and of course, whenever these kind of, especially when a lot of retail investors lose their wealth owing to FTX kind of scenarios, it creates a bad sentiment in terms of retail investors as well as larger investors. So investment ecosystem definitely gets hurt, and that is what has happened. But nonetheless, people believe in the technology, believe in the future of internet that Web3 talks about. And so it's a mixed kind of scenario today, I would say.
Right. So this is a recent FTX collapse has brought everybody's attention to the immediate need of regulations. According to you, what kind of regulations are needed in this industry?
So one, I think it was, there has been always a debate about, centralization and decentralization, right? So Web3, the major benefits of Web3 comes out of the tenet of decentralization. But the challenge today is that what happens if we want more and more people, more and more users to adopt Web3, they would like to see similar interfaces which they are very used to in the Web2 space. And that's the reason, a lot of centralization still remains just because of user experience. And that is where these centralized exchanges come in. People are still not very comfortable using MetaMask, holding their keys, because there's a saying in the crypto world that, you hold your keys and you hold your crypto. If you don't hold your keys, you don't hold your crypto.
Right.
But we understand that, there are quite a few retail investors who are not very comfortable managing their private keys or non-custodial wallets like MetaMask. And that's where, people rely on centralized exchanges to hold their asset holding or token holding, as well as do transactions on a regular basis. But the challenge is that, the centralized exchanges are not regulated right now. Some, like, Coinbase is a listed company in US, of course, that brings in a decent amount of SEC regulations. But apart from that, most of the exchanges are either self-regulated or not regulated at all. And that, I think, needs to be there. So one, there needs to be more trust and transparency as to how the exchange is operational. And these are all basic regulations which are required, where they need to expose what kind of asset holding they have, what they are doing with the asset. Because at the end of the day, exchanges are also taking these assets, putting them into either some of the liquidity pools to make interest over it, or various other financial products. But if there's no transparency, then retail investors who have put in their money there, they don't know what is happening. Right. So those kind of trust and transparency can be brought if we have clear regulations that define these centralized entities.
So you talked about transparency. So after the FTX collapse, Binance's CEO Chanpeng Zhao emphasized on proof of reserve, and a lot of investors showed interest in that. Can you explain proof of reserve concept to our viewers, and what changes and benefits do you think will come with proof of reserve, and how much transparency will it bring?
Yeah, so proof of reserve is a very interesting concept. In fact, I wrote a concept note 2 years back when we were talking about tokenization of real world assets.
Okay.
So the whole idea is that there is a token that you are buying, and that token has got a value. Now, what is deriving that value? So in the case of real world assets, it's the underlying asset which is bringing that value. If it's a gold based token or a token based on, let's say, stable coins, USDT, USDC, etc., which are backed by US dollars. Now, the challenge today is that as the user, if I'm transacting in these tokens, whether it be a stable coin or asset backed tokens, I do not know what is happening with the underlying asset. So there needs to be a transparency of that underlying asset. That is what we call is a proof of reserve, that whatever underlying asset is kept as a reserve to that token, that should be open and transparent. So like, Tether typically submits their bank reports or cash reports every month, where you get to know. But what is needed is not monthly reports. What is needed is almost real-time reports where anyone can see what kind of reserves are there. What is the reserve which is backing this asset? So that is in the case of tokenized assets. And extending this further to exchanges, in the case of exchanges also, they have got asset holding. People are depositing tokens and then they are transacting in this with those tokens within the exchange. And when these tokens are, let's say, put into liquidity pool, so whenever you put a token in a liquidity pool like Aave or Uniswap, then in that case, you get some token in return, which is like a receipt of your tokens given. So if you have a valid holding of these, then at least people know that, where the funds are being parked. So how many funds are still lying with, let's say, Binance? What portion of the funds is put into which liquidity pools? So to have that kind of transparency, you require proof of reserve. So proof of reserve is basically a proof. So one is on-chain data, whatever data is already in smart contracts. So that can be easily fetched and shown on a dashboard. And apart from that, whatever data, whatever number of tokens, etc., holding they have within their own wallets, they need to expose those wallets. So exchange needs to tell us that, okay, these are 100 wallets where all the funds are. And this is how these funds are moved and parked somewhere else, whether as a liquidity or as a loan or whichever financial product. And all this on-chain data should be visible to all the users on a dashboard. It should be a public dashboard where anyone can see and how the funds are, what kind of funds are there in the reserve and how the funds are being deployed elsewhere. So this is what we mean by proof of reserve. And then you can clearly say, the very concept will give it immense, transparency to users and will be a very big check and balance for the management, so that they don't mess with the funds or misuse or abuse the funds.
Right. So in 2022, we saw a lot of companies going bankrupt. The recent FTX collapse is also an eye-opener for every crypto enthusiast. What points should one keep in mind before selecting a crypto exchange for their investments?
Yeah, so that's a tough question because normally the answer is that one should rely on popular exchanges only, which has got proper KYC, AML checks. Right. They are licensed or regulated in whichever country they are operating in. So this is normally said, and that's why people resort to large exchanges like Coinbase or Binance, etc. But the thing is that what happened with FTX was FTX was one of the top 5 exchanges in the world, and still it happened with FTX. So people are really scared, and it's very difficult to say which exchange they should actually trade on. So one safest piece is you trade on centralized exchanges, but you keep your holding in a cold wallet or a non-custodial wallet. That I think, I know that there's a learning curve. There's a discomfort as to manage your private keys, but that's the hard way to learn, but much safer way to keep your crypto. Yes, for the transaction. So what we say, a combination of cold wallet and hot wallet. So your holding which is there on the exchanges can be like a hot wallet where you keep only that amount of tokens
Right.
which you are frequently trading on a daily basis. And rest of the tokens, you keep in a non-custodial wallet. Right. That I think is the safer part. Second is, of course, with these proof of reserves and other kind of concepts, I think there will be more self-regulations we are going to see, and more regulations also we are going to see from different governments. So based on that, Coinbase, Binance, there seems to be a good option today where, you can park your funds.
Okay, so talking about CBDCs, India's much awaited central bank digital currency pilot project for retail users has launched. What is your take on it? How do you think we will benefit from it, and how will it be useful?
So I think we have been used to digital money for quite some time now. And I think CBDC is an extension of digital money. It's right now, from a technology standpoint, when I read the paper about e-rupee, it was not clear whether government will actually use blockchain or they will continue to use a centralized ledger. So from a retail perspective, it's very difficult to say at this point of time what kind of impact it's going to bring, because from a user perspective, I think it's pretty much like a digital money we use on different wallets. But in a wholesale market, like, intra-bank transactions or interbank transactions, I think CBDC will play a very big role. If it uses a proper decentralized ledger, then, it will improve the time of settlement, because in blockchain, what happens is all the transaction and the settlement are pretty much happens at the same time. So it will reduce a lot of back-end cost, and it will bring a lot of efficiency into managing the movement of funds or the money life cycle. So that is what CBDC will bring out. So it's a very well established concept in the wholesale market, at least. In the retail market, I'm not sure how it's going to impact a normal retail user, because it will be very similar to the way we are using Paytm wallet or PhonePe wallet.
So talking about the NFT market, what is your overall view on the current NFT market situation, and which section of NFTs will gain the most traction in coming days?
Yes, so NFT, I think the market is into dumps, no doubt. The collectibles market, I would say, not right. NFT market. So NFT, a boom happened. There were a lot of different kind of collectibles that were launched, different kind of avatar projects and various other projects. And I think a time came when, these kind of projects much more exceeded the demand in the market. So the supply became so much more that it was bound to happen. The collectibles market had to go down. But what this whole episode has given us is the value of NFTs from a technology standpoint. That yes, now we have a technology where a unique and rare asset can be tokenized, and there is a clear ownership, and the ownership can be transacted clearly on using blockchain. So now people are seeing NFT beyond collectibles. So one, on the digital asset side, we are seeing some very good startups coming in the music space and domain space and few other digital assets. And the second is, moving beyond these assets to financial assets and other tangible assets. So now NFTs are being tried out in invoices or different kind of certifications, and real world assets, whether it be carbon credits or real estate or bonds or mutual funds, etc. Equity tokenization itself is picking up. So and it's a combination of, sometimes you use fungible, sometimes you use non-fungible tokens, right. NFTs, or sometimes you use a mix of them. There are standards now where you combine a fungible and non-fungible tokens. So NFT from a collectible standpoint went down big time, and I think it was expected, because the prices has gone unnecessarily high, and a lot of projects came into the market. But now with NFT beyond collectibles, I think there's a huge market, and we are going to see in the next 3 to 5 years, lots and lots of different kind of assets are being tokenized using NFTs and some of the variants of NFT standards. And we'll see that, they are going to be huge markets and hugely successful. We have been associated with quite a few projects which are working in tokenization space, whether it be Unicus, or there's a layer 1 blockchain called DCOM out of Australia, very much focused on tokenization of real world assets. So that's what we are going to see. We are going to see an evolution of NFTs from collectibles to assets where there will be a real value.
So can we say that you are seeing the future of NFTs quite bright, and those golden days that we probably saw last year in 2021 will return for NFTs?
Yeah, absolutely. And but not in a way what happened last year when there's a euphoria. So these are all very established use cases in the sense that, we know assets are being managed. Before internet came in, before digital came in, these assets were managed manually on paper. When digital came in, we know that, we have seen how easy it is now to transact on stock exchanges, right? How easy to manage asset within an organization. So asset lifecycle has dramatically changed in last 20 years owing to digital. With NFTs and blockchain and smart contracts, this is going to be another major change that will happen. So we'll start seeing that, real world assets are being tokenized and then transacted. So we'll see mortgages happening, very quickly, and all the asset transfers that we see today, which takes a huge amount of time, either due to intermediaries, either due to checks and balances, will become very seamless and very and ownership transfer, etc., will become very seamless. So huge changes will come, but we'll see the existing assets being tokenized and used as NFTs.
Thank you so much, sir, for having this conversation with us and giving us your valuable time.
Yep. Since we are coming to the end of 2022, I would like to wish a happy and prosperous New Year, a great New Year 2023 to all the viewers, spectators, listeners of 3.0 TV.
Thank you so much for watching this special segment of Crypto Masters. This is me, Ruchi Sharma, signing off. Do like, share and subscribe to 3.0 TV. Have a great day.